What is venture capital? If you start as an entrepreneur, there are several sources of equity financing. In general, you can differentiate into informal equity and formal equity. And the difference between the two is informal equity is provided by private individuals in general, which could be business angels on the one hand and family and friends, or as we say, 4Fs on the other hand. And formal equity works with some kind of fund structure. And this fund structure has implication, and this is why informal and formal equity is basically differentiated firsthand. There's more to that. And if you look closer into formal equity, you can say there's investors with mainly financial goals, and there are investors who have financial and strategic goals, both. And venture capitalists are the ones who have primarily financial goals, so this is why you find venture capital there. And you can again differentiate certain venture capitalists. If you want to do that, you can say, okay, there's financial investment companies. Most of the venture capitalists are financial investment companies. And then there are other sorts of companies, corporate investment companies, if they have purely financial goals. Most of them have financial plus strategic. You'll find them over here. And then you have publicly funded investment companies in certain countries to help the venture capitalist scene to establish. And in some countries also you have incubators. Incubators who can be company builders. So there are entrepreneurs and they go to those incubators and the incubators provide money plus help, and this is also out of financial reasons. And these are all venture capitalists. The common thing is they have a venture capital fund or some kind of fund structure, and they work in basically the same process. And this is what we are going to explain you later. In addition to that, we have investors with financial plus strategic goals, and they are normally considered strategic investors. Many corporations have corporate venture capital programs, and these are typical strategic investors. So if you as an entrepreneur start your business, you have to learn how to use these equity sources. And if you really start your business and you just have an idea, it's most probable that you start with your own money, which is founder's money. You might want to start with family money, friends' money. So this is the typical like pre-round of starting with the 4Fs. In addition to that, if you then develop your company more professional or a more professional way, you try to get business angels on board because they do not only provide money and more money than family and friends in most cases are able to provide, but also they can help you establish the business because they've seen everything as former entrepreneurs and so on. And then, if you have some traction, if you have understood your business model, if you're on the path to profitability, you can see it here if you look at the return. So if you know how to scale up, then it's probably right to use VCs in order to invest in your company. And there's more. There are strategic investors who come later on. Maybe someone wants to make an investment because he especially wants to use your technology, or you'd like to make this company buy the whole entity. And later on, if you really have profits, if you can work on a positive cash flow basis, then you're also ready for debt capital, bank loans, and so on. And then, in addition to that, later on, in order to make especially this early equity cycle work, you have to go for some exit, which is the IPO, for example. And this is why this is in later stages also a source of capital on the one hand, because it's public money, and an exit mechanism on the other hand. So this is to understand the cycle and especially the way or the path you as an entrepreneur are going through if you want to build your company. If you look at venture capital in the US, you can see the total volume of VC investment in the US per year over the last 20 years. Starting in 1995, and you see 1995, venture capital was present before, but it really started then, and especially went really high in the dot-com bubble. As we all know, the bubble crashed and it went down again, and now it's recovering to some extent. So we have significant amounts of money being invested into venture capital. However, what you can also see here is it always takes cycles. So it's a cyclic market on the one hand. If you look at that, it's a growing market on the other hand, and it's an important market. If you look at the numbers, you can see here $40-60 billion.